3 weeks ago, Samsung did something that nobody was supposed to find out about. Internal procurement documents, leaked by a supply chain analyst who probably shouldn't have been talking. What they revealed should terrify every other battery manufacturer on the planet and excite every person who understands what is about to happen to the silver market. Pull out your phone right now. Look at it. That device has maybe half a gram of silver in it. Samsung's about to build batteries that use 2,000 times that amount per battery, and they just secured supply agreements for what industry insiders are estimating at 30,000 tons of silver over the next 18 months. Let me put that in perspective with a number that should make you pause. Total global silver mine production? About 823 million ounces per year. Samsung's procurement? Roughly 965 million ounces. That's more than an entire year of everything mined on planet Earth going to one company for one technology. And here's the part that should make your jaw drop. Silver just hit $66.70 per ounce. An all-time record. Highest price in history. And Samsung is buying at these prices, not waiting for a dip, not hoping supply increases, locking in massive quantities right now at record highs. Why would they do that? Because they know something. And what they know is about to reshape the entire electric vehicle industry. Let's talk about what Samsung is actually building, because this is where the story gets wild. Solid-state batteries. If you've been following the EV space, you've heard this term thrown around. But here's what nobody explains clearly. These aren't just incrementally better than lithium-ion batteries. They're completely different. Current EV batteries, liquid electrolytes, can catch fire, degrade over time, take forever to charge. You know the drill. Solid-state batteries use solid electrolytes instead. Safer, more energy dense, can charge in minutes instead of hours. This is the holy grail the auto industry has been chasing for over a decade. But here's the catch that almost nobody talks about. Silver. These batteries, especially the designs that actually work at commercial scale, require massive amounts of silver. And I am not talking about the 25 to 50 grams you find in a conventional electric vehicle spread across all the electronics. We're talking up to 1 kilogram of silver per battery pack in some solid-state designs. 1 kilogram. That's a 20 to 40 times increase per vehicle. Now multiply that across millions of EVs that Samsung, Toyota, BMW, and every other manufacturer wants to build, and you start to see why someone inside Samsung made the decision to lock in 30,000 tons right now. They're not being cautious. They're being realistic. Because here's what's happening in the supply side, and this is where the crisis becomes undeniable. The silver market has posted deficits for 5 consecutive years. 5 years in a row where humanity consumed more silver than we mined. The deficit has to come from somewhere, and it's been coming from above-ground stockpiles, London vaults, the traditional home of tradable silver. June 2022, over 31,000 metric tons. March 2025, just over 22,000. That's a one-third drop. Nearly 10,000 tons just vanished from available supply in less than 3 years. Where did it go? Into solar panels? Into electronics? Into AI data centers? Into electric vehicles? And increasingly into strategic stockpiles being built by companies like Samsung, who understand that the silver available today might not be available tomorrow at any price. Now here's where this connects to something happening right now in the broader economy that most people are missing. US unemployment just hit 4.6%, highest level in 4 years. Job growth essentially stalled at 64,000 jobs added in November. The Federal Reserve confirmed another rate cut last week. What does unemployment have to do with Samsung buying silver? Everything. When economies weaken, precious metals rally. Lower rates make non-yielding assets like silver more attractive. But silver isn't just a safe haven play. It's not gold sitting in a vault doing nothing. Silver is the most industrially critical precious metal on Earth, and the technologies driving future growth all need massive amounts of it. So silver is benefiting from both sides. Safe haven buying as the economy weakens. Industrial demand from the technologies that are supposed to drive future growth. It's a perfect storm. And Samsung just positioned themselves right in the middle of it. Let me show you why this matters for everyone watching, not just Samsung. Because this isn't just about one company or one technology. This is about a fundamental supply-demand imbalance that's about to get dramatically worse. Solar panels consumed somewhere between 193 and 232 million ounces of silver in 2024. Every panel uses about 15 to 20 grams, and the world is adding over 600 gigawatts of solar capacity annually. That's 600,000 megawatts, all requiring silver. AI data centers? These servers use 2 to 3 times more silver than traditional servers. Why? Power density. These machines run so hot and process so much data that they need advanced cooling and complex electrical systems. Silver's thermal and electrical conductivity is unmatched. Goldman Sachs projects data center electricity demand will double by next year and increase 165% by 2030. And here's the multiplier effect nobody talks about. Tech companies have pledged to power these AI data centers with renewable energy, which means solar, massive solar installations, which means even more silver demand on top of the silver already in the servers themselves. Electric vehicles beyond just batteries? A conventional car uses 15 to 28 grams of silver. An EV uses 25 to 50 grams even before solid-state batteries. And by 2031, EVs are projected to account for 59% of the automotive sector's silver consumption. Add it all up, AI, solar, EVs, all happening simultaneously, all requiring silver, all competing for supply from a market that's already running a 5-year deficit. This is why Samsung is moving now. Quick pause here, because I need to be very clear about something. I'm not a financial advisor, and nothing in this video is financial advice. This is purely educational content about market dynamics and industrial trends. Any investment decisions you make are entirely your responsibility. Always do your own research and consult qualified professionals. Now, back to what's happening. Samsung's leaked procurement documents revealed something else that should concern every other battery manufacturer. They're not just buying silver, they're locking in long-term supply agreements with specific miners and refiners. This isn't spot market buying, this is strategic positioning. And they're not alone. Reports from supply chain analysts suggest Toyota is in similar discussions. BMW is exploring long-term contracts. Chinese battery giant CATL is aggressively securing silver supply. Everyone who understands the solid-state battery timeline knows that the companies who secure silver supply now will be the ones who can actually scale production in 2027 and beyond. The companies that don't, they'll be stuck competing for whatever's left at prices that could be significantly higher than today's record $66.70. Let me give you a scenario that keeps battery executives awake at night. Imagine it's late 2026, solid-state battery technology is proven, production lines are ready, consumer demand is massive, but there's not enough silver available to build the batteries at scale. Production gets delayed not because the technology isn't ready, but because a critical material is in shortage. That's not speculation. That's a real possibility that industry analysts are seriously discussing. And it's exactly what Samsung is trying to avoid by securing supply now. Here's what makes this moment historically significant. Previous silver rallies were driven by speculation. 1980, the Hunt brothers trying to corner the market. It was artificial. It collapsed. 2011, post-financial crisis fear, investment demand. That too pulled back when fear subsided. This time is fundamentally different. This rally is being driven by structural, long-term industrial demand from multiple sectors simultaneously. The electrification of transportation, the AI revolution, the renewable energy transition. These aren't temporary trends. These are decade-long transformations of how civilization functions, and all three require massive amounts of silver. When Samsung commits to buying 30,000 tons at record prices, they're signaling to the entire market that they believe supply scarcity is the new reality. And when other manufacturers see that signal, they start moving too, which creates exactly the supply squeeze everyone's trying to avoid. This is how commodity supercycles begin. Now, let's talk about where silver goes from here, because the price action is telling a story. Bank of America recently raised their 12-month target to $65 per ounce. We've already blown past that. Felipe Geisels at BNP Paribas Fortis is publicly calling for $100 silver, potentially by late 2026. RJO futures analysts suggest silver could trade above $70 per ounce in the first half of next year. Are these targets realistic? Let's look at the math. The gold to silver ratio currently sits around 68 to 1. Gold costs 68 times more than silver. But mining production ratio? Roughly 1 to 7.5. We mine 7.5 times more silver than gold, yet it costs 68 times less. Many analysts argue this represents massive undervaluation. If that ratio reverts toward historical norms, silver prices would need to rise substantially just to close the valuation gap. Add in the structural supply deficit and explosive industrial demand growth, and $100 silver starts looking not just possible, but probable. But here's what matters more than price predictions. What's really happening is a fundamental shift in how the market views silver. For decades, silver was seen as gold's poor cousin, a monetary relic, something your grandparents kept in a drawer. That narrative is dead. Today's silver is a critical industrial commodity that enables the technologies defining our future. Without adequate silver supply, the energy transition stalls. EV adoption slows. The AI revolution hits physical constraints. This isn't hyperbole. This is material science reality. Samsung understands this. That's why they're not waiting. That's why they're buying at record highs. That's why they're locking in long-term supply agreements that might seem expensive today, but could look brilliant 18 months from now when silver is trading at 70, 80, or $100 per ounce and supply is even tighter. And here's the part that should make everyone pay attention. Samsung's move is probably just the beginning. When one major manufacturer secures supply aggressively, it forces others to act. Nobody wants to be left without critical materials when production scales. This creates a cascade effect where everyone starts competing harder for limited supply, which drives prices higher, which makes supply even more valuable, which intensifies the competition. It's a feedback loop, and we're watching it play out in real time. The leaked procurement documents that revealed Samsung's 30,000-ton play weren't supposed to become public. Supply chain analysts who shared the information did so quietly, mostly to clients who pay for institutional research. But once that information reaches a certain threshold of market awareness, it changes behavior. Other manufacturers start asking questions. Are we secured? Should we be buying more? What happens if we can't get supply when we need it? Those questions lead to actions. And those actions are what's driving silver through all-time highs right now. So here's what we're watching unfold. A major technological transition requiring unprecedented amounts of a metal that's already in structural deficit. A supply side that can't easily increase production because most silver comes as a byproduct of mining other metals. A market that's been drawing down above-ground inventories for 5 straight years. And now, sophisticated industrial players like Samsung making massive strategic moves to lock in supply at any price. This isn't speculation. This is materials scarcity meeting technological transformation. The price is responding exactly how you'd expect. For anyone watching the silver market, for anyone invested in technology stocks, for anyone trying to understand where the bottlenecks in the EV transition might appear, Samsung's move is the clearest signal we've gotten. The companies who secure critical material supply now will be the winners in the solid-state battery race. The companies who don't will face delays, higher costs, and competitive disadvantage. Silver just broke $66 per ounce for the first time in history. Samsung just committed to one of the largest industrial silver purchases in modern history. The supply deficit is entering its 6th consecutive year. Industrial demand from AI, solar, and EVs is accelerating, and we're still in the early stages of the technologies that will drive silver demand through the end of this decade. The move from $30 in January to $66.70 today isn't an ending. Based on what Samsung and others are doing, based on the structural fundamentals, based on the supply-demand dynamics, this looks a lot more like the beginning of a much larger repricing. The market is waking up to silver's critical role in 21st century technology, and that recognition is only just starting to be reflected in price.